Hello, how to review stocks before adding them to your watch list? Well, we have some stocks here that we are analyzing, and when we did our first pass analyzing stocks for our 2026 watch list, we left them blank. So therefore, we are going to analyze them to see, if they are worth adding to our watch list. And the first one is Dyson. And we are using a maximum monthly chart. We have the date on the x-axis from the past to the present, and we have the price on the y-axis from $0 up. So when we look at Dyson, it's uptrending. Now let's look at the mountain top. It's getting taller and taller. It didn't come back down until here, and it came back down and then start going up from there again. So with that in mind, when you buy this, it's going to be a short-term investment. So it does not really respect a support line supporting the upside wall of the mountain. Let's see. If we trace this 1, 2, 3, 4, 5, 6, in fact 5 years growth, and then sell it and wait on it. But then wait on it, it can take 1, 2, 3, 4, 5 years to find it again. So it came back down here, went higher up, and came back down, and is struggling to go back up. So I said no to it before I left it blank, because again it has ways to go to exceed this area. But we can say yes to it. When it came back down here, it came back down higher, $10 or $4 difference here. So 45, 46 to about 56 or so. So $10. So we want to sell it after it reached all-time high, but not just that, 5 years later type of things. So for that in mind, we are to buy it. We are going to buy at this value line, and it's living there already. So if you want to get it, you can get it now. It doesn't seem to be coming down to it much before leaving. So we could buy at this value line and sell it 5 years later. So that will be the analogy behind this. And for this one, we can say short-term investment, and we can put buy at value and sell after peak, after new high, and is important, and 5 years later from valley. I don't know, from valley, not valley, but that is just to give us some ideas. The circumstances that we will want to trade this. The next one is MKC. So again, we are seeing uptrending at the valley there, and we are seeing taller mountain, but then it reached here in after 2020, and is pulling back down, but has not gone down up yet. So it reached this value line at this, that's the lowest price, 58, and the lowest price here is 63. 3 years later, having it with in the portfolio, and when it's wandering around the valley before growing up, but still you have that small profit in it, is the reason why I'm going to pass. But again, when you see at the valley around 60 something, and you see around the peak for 107, you can have about easily, you can have a $50 profit per share difference there. So there is a growth in it, if we try to trace the support line of the mountain is claiming, there is a growth in it, but you know what, I'm just going to pass. So the answer is going to be a no for it. Not because it's bad, it's just we have seen better in the list. So the next one is CAG. Yeah, CAG. Okay, it's uptrending, and we have quite a bit of things going on here, but it has this growth here that it took quite a bit of years to excel, and now that it pulled back down here, let's see, when it pulled back down here, it took way many years to come down, and then took some years to go up, continue, and then pull back. There is kind of a stable company that takes time to go up, takes time to go down. So for that reason, it's going to be a no. But it's uptrending at the valley line as well, and is making higher highs. But you can see so many years. Again, all those dotted lines are years. So many years before it breached this price here. Is it going to take that so many years before it can breach it again? For that reason, we are going to say no for it. And I even have some information there. CPB. Okay, CPB is uptrending, but then it went below it here. Again, we have this mountain here that it took quite a bit of years before it accelerated, and now it took quite a bit of years to come down, and it's going a little bit lower before start going up. The answer is going to be a no. We are now really seeing a good growth in those companies, and again, they are in the sector of staples. CSJM. So SJM, we have, it's now respecting a good support line here for me to rely on. For that reason, the answer is no. Like, since we are the one trading uptrend and trading growth stocks, we are not seeing a good growth in this sector to work with. The next one is CL. I believe CL we added though. So CL we added. So we have some good growth going, and last year it reached all-time growth and pulled back. We even bought some there. So this is a yes. It's going to be a short-term investment one. Again, that'll be one. If you want to buy, you'll buy it now because it's right at the valley line. So KMB. So KMB, wow, the line is busy. So let's take few hours to see if we can see better here. Okay, it pulled back. So we have this valley line here that it has not touched base in any recent years, and now it touched base with it and start going down again. We have all-time high here and kind of consolidating around here and then pull back. The answer is going to be no. I'm not seeing a good growth in here to rely on, but it is a growth stocks regardless. Just not the one that I like. So I'm going to put no here, no here, no here. XOM. So XOM, okay, last year it reached all-time here, but we have a big, it went way below the valley line here during the pandemic. For that reason, the answer is going to be a no. Is following this valley line. This is the valley line that is following, but what a bit of a dip here. The answer is going to be a no. You can trade it with another strategy. We just don't want to trade it with the strategy we are using. CVX. So CVS, we have this valley line that is going again like that one. We have quite a bit of dip in during the pandemic. but then it start going up from there. So I don't know, it takes some years though to go higher up. And again, like the others, the answer is going to be a no for this one. At least we have this value line that is claiming. If we take this out, we have higher highs, but look here, I think it breached it here and took some years to come back up from here, which is okay, and then continue higher up. Now it's on its way down. So the answer is going to be no. It's just, I don't know, I just don't like that chart. CTRA. So CTRA seems to be respecting this value line. We have this all-time high here that it has not replicated yet, so therefore the answer is going to be a no. The next one is DINO. So DINO is respecting this value line, but again we have all-time high here 2018-19 that it has not been able to replicate yet. So we want to see our exit point, not just our entry point, which is the valley. And right now we are seeing a clear valley line entry point. It left it this year, but we are not seeing a clear exit point, unless you want to pick a horizontal resistant line to be your exit point, which will work as well. That way you can trace within it. I'm not seeing a way out once we get in. For that reason, it is a no. The next one is ENB. So ENB is trending up, but oh, okay, is going up, but then all-time high is so far in the past that we don't know when it's going to exceed it. But it seems to be getting close to it every time though. But then once it reaches that all-time high, is it going to take so many decades again to exceed it? For that reason, the answer is no. The next one is TRP. So TRP, we have this that is climbing up, but then it came back down a little bit lower here. But we have this value line. It took sometimes to exceed it and then came back and is on its way to there as well. But let's see, we have quite a bit of jagged teeth here, but is at least is making it clear defined here, and it reached this value line and start going up. So we are going to add it to it, and I feel like it could exceed this one. My concern with this though is all-time new high is not growing. It's kind of stagnant. Do you see it? This one is barely higher than this one, and this one is barely higher than this one. So it's like you have there that it does not go past. When it's uptrending at the valley, the resistance line is capped. It's not going higher than that. For that reason, I'm going to pass. I want to see growth on both sides. Otherwise, the profit will get slimmer and slimmer and slimmer since the value line is rising, but the mountain is not getting taller. So for that reason, I'm going to say no. Okay, I haven't said plateau peak there. So don't know when I put that there, but it's going to be in 2025. Probably October. But anyway, so BMO is the next one. So BMO is trending up. So let's see here. It took some years to bridge it. 2 years here and so forth. It came back down 2 years. It has not come down yet and start going up higher. So don't know how I feel about this one. And it has not come down. So when it came back down, it should be able to excel the previous one. I would think so. But it takes quite a bit of years to come back down to the valley. But then from there, it can make this wide dip here and then get a little bit taller. So buying it will be, in fact, is here that it breached this. So pretty much it's going to be when it breach it, you just sell it. When it reach all-time new high, it breached the previous all-time new high, you sell. So this one we are going to add it to it, and we are going to make this value line to be where we will buy, and we will sell it after it reach the previous peak. When it excel it, we will sell it. At least the peak is getting taller and taller. So okay, so when we come back to this one, we are going to put short-term investment, and I think I put some note here, and I'm going to put today's date and just put that buy at value and sell at next new high to just get out. So that will be a short-term investment for it. The next one is TROW. So TROW is uptrending well. Is it TRO price? Yeah, TRO price. So it's uptrending well, but there is this here that it has not excelled yet. But let's see. Last time it was there, but then this one went a little bit lower and so forth. For the reason, we are going to say no. But it pulled back and it's getting ready to start going up. So we are having a higher mountain every 2 years or so. When it pulled back here, about 2 years, it went there. About it came back a little bit closer and then went there. But then it has been down here for 3 years or so and has not found the momentum to start going up yet. So with that in mind, no, not 3 years. I mean, it's coming down 1, 2, 3, 4 years that is coming down and has not started going up yet. Again, I don't know if this is an unusual growth for it. So far the growth here, the tip here coincided with the previous one before the pandemic. So it's going to take a while before it can breach this. So for that reason, the answer is going to be a no. But because again, we don't see a clear exit point to get out. So clear in valley, but now a clear exit is the reason why we are saying no. The next one is STT. STT is trending up, so let's see. It's taking years to breach it, and then again it's taking years to breach it, and has been around the valley line quite a bit of time. So that would be the reason why I would say no to it. But again, the valley line is uptrending. Besides this one that will make it this one negative, each time it came back down, this is what, CC 56. I think it's kind of low. So we are going to say no to it. It can be around the valley line. It can touch base with the valley line multiple times over the years before go up. For that reason, we are going to say no to it. You'll buy at the valley line, but you'll expect those many years of holding on to it and barely making much profit before you sell it at a higher price. And by ends, let's see, the last time the thing is here was, in fact, no, it will be somewhere here, 17, and the highest price is 113. So over $100 profit when it reached there. Even if we just sell it after it reached all-time high, it's going to be 92 from 33 to 92. So you can see, but again, we are going to be in the trade for 1, 2, 3, 4, 5, 6, 7, 8 or so years. Those are things you have to consider. It's not a bad stock per se, it's just a time we are going to keep it, you know, going up and going down until it reach all-time new high. For us to sell it is the reason why we want to say no to it. Again, clear valley, no clear exits is the reason. So the next one is NTRS. NTRS. So NTRS, I'm not seeing some lines here. So let's see if we can trace some. Seems to me that is respecting this valley line. So we have this mountain here that it took quite a bit of years before it was able to breach it. But then from here, 3 years or so, it went higher, pull back. 2 years or so, it went higher, pull back. 2 years or so, it went higher. So for that reason, we are going to say yes. And when it comes back down to this valley line, we might buy some more. Again, yeah, I won't call this a good chart though. I will just call it okay chart. I have those as well. The next one is MSCI. So MSCI, okay, I think it's not really respecting a good trend line here for me to work with. Now what I wanted to do. So for that reason, you see, it's going sideways there. We are not seeing the value line to buy at. For that reason, the answer is no, not a clear value line. So CVS. So CVS is following this value line, okay? But we have this all-time high so far in the past. Not a clear exit point for us. That's why we are going to say no. It almost came close to it, but and I think this time it could breach it. And once it breaches it, it should be able to keep repeating it. But until then, the answer is no. Not a clear exit here. Good value, but not a clear peak. So the next one is BA. So BA, Boeing, we have this value line, but again we have all-time high here that it has not exceeded yet. So for that reason, the answer is no, not a clear value line. So the next one is INTC. So INTC is a no. It seems to be horizontal, and the value all-time high is way in the past. TER is the next one. TER is uptrending, but again we have a big growth here. It took all these years before it did it again, and now we are having it here. So we don't really know if it's going to continue this pattern here or if it's going to revert to this. But other than that, it's uptrending here, and once it reached here, it went all the way up, and now it's going down. So, but last time it touched base with this value line is here. It reached all the way high up, pull back, is close enough, but it didn't breach it, and it pulled back again, even lower than here. So for that reason, the answer is no. ADBE. ADBE. So it's now following a clear uptrend line, value line, and is trying to breach this but has not gone in yet. So we have this value line that it went a little bit below it, but again, because it has not breached this all-time high yet, for that reason we are going to say a no. There is growth to it, but let's clear those lines. There is a growth to it, but you know, it went a little bit below here, it did a little bit here too, and it has not found the momentum to breach this. For that reason, we are going to say no. Again, we don't even have a clear valley line, and we don't have a clear exit either. OTEC, no OTEX. So we have a good valley line here uptrending, but again we have this all-time high here that it has not breached it yet. It's working on it, but it has not gone there. And when it's leaving the valley line, it can continue going up for a while before it will pull back. And again, now it's trying to, just like here, it's trying to find its momentum before doing that growth, and that growth could last a while. So we have to count the number of years it will have growth to decide to sell, because we are not seeing a clear swing to work with. It's a short-term investment type of stocks. Once you see it at the value line and bought it, but again it can linger around that value line for some years before finding that momentum. For that reason, the answer is a no. Nothing wrong with it, CF, but the way we are trading it, we are now going to add it to our watch list. So we have this one that this might be the value line, has not come back to it yet, but we have this all-time high that it has not exceeded yet either. The answer is going to be no. So NUE. So NUE, again we have this all-time high that is trying to breach, and it can go some years up and then pull back and start going up from there. So it can go up for 1, 2, 3 years or so before it will pull back. So this could be okay, buying it at that value line. It left it already. When it come back to it 3 years later, maybe we might buy some, but until then, that is it 3 years growth? Yeah. So I mean, we will put this back in it with that in mind. So it's going to be a short-term investment, and I put some information there. I'll keep it like that. The next one is PLD. So PLD is following this value line. We have this here. It came back down and start going up from there, but has not breached it yet. So, but again, that's something that can have a long growth in it. It did something here and pulled back sharply, but then has a long growth, and now it's pulling back down and could start going up from here. We are going to add it to the watch list, but we don't know when we will buy it, because we will want to buy at this value line. So, and probably again, it's just, let's see here, around here it breached this previous one, and then we can see if we want, in fact around here it came back down and then went back up higher, came back down and then went higher up, and then go from here. So it can take a while. It reach it and start going up from there, but we are not going to do anything. We are just going to observe it. We want to buy at that value line and not anywhere else, and sell it after a new high is reached. So if we can reach this high before coming back down, that's fine. So we are going to say yes to this one, but it's going to be a short-term investment because we don't know when we will buy it, but we can add it to the list and keep it there. So the next one is CCI. CCI, we have again a big growth during the pandemic or after. Now it's going down, but Besides that, it tends to go up, just climb up. So that is one thing. When you buy it around the valley line, you can just, hold on to it for decades before you sell. So buying it around this valley line for $19.209 around here for those number of years is something to keep in mind. If we buy it this low, right now is on its way down. So, and it can take quite a bit of years, maybe 10 years or so to grow, and then many years, 5 years or so to come down. So with that in mind, to buy it is going to be around this valley line. It's already breached this one, so therefore it's going to be around this valley line if it's going to come down to it. The thing is, this one can even be updated. I don't know if I want it to come down to around this area. It's going to go well above it. But then if I touch base with here, it's not going to touch anything else. So for that reason, I'm going to keep it lower and keep an eye on it. That if I'm going to buy it, I want to buy it somewhere that low. But again, I'm seeing it when it left here, we have this. So we are just going to keep an eye on it. If you buy it somewhere here, you grab one share and it drop back, you can grab another share, and then you know that this will be the value line. But again, the growth can be years of growth. That is the thing. So with that in mind, it has been going sideways here. So I don't know if it's going to go any lower than that. It's just that we are not really seeing a good previous history to work with. We will add it to the watch list, and we know that it's going to be an investment type that we'll buy at the valley line and sell it at the peak. And if you feel like buying it where it is now, you can grab a share. If it comes back down, you can grab another share. But we know that it's going to be decades of growth before we sell it. So this, we are going to add it back to it, and we are going to put it as a short-term investment. The next one is CMS. So CMS is going upward here, but then we have this growth here before it pull back down and start going up. So for that reason, I'm going to keep it as a no, because again, if it repeats that, we are going to find it lower. So we don't want to get trapped in it when we buy high. For that reason, the answer is going to be no. So for that is pretty much reviewing all those. We put few back in it. Most of them became no. And that is pretty much how we review our stocks to see if there are some we can add back to our watch list while we are building our 2026 watch list. Thank you so much for watching our videos. We thank you very much for your time. Thank you for all your comments, and thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and NASDAQ.com our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. We organize a small group online workshop where you can practice analyzing stock to see if there is a stock that is well positioned for you to buy some share during the week. If you are interested, will you please check our online store liberdownload.com to reserve a spot. Thank you. For more tips on how you can create your own watch list, will you please check our playlist in the description of this video. Thank you for your time.